All right, fabulous. Well, thanks for joining us, everybody. My name is Mark Marcellus with Watson Realty Corporation. We're here to talk about first-time home buyers and top mistakes a first-time home buyer makes, and how to avoid them and how to save money when you're thinking about buying your home. Okay. As a first-time home buyer, do you feel concerned, stressed out, intimidated, anxious, or uncertain? I definitely remember the first time that I bought a home, and I was all of these things. I didn't know what I was doing. I had been working in real estate and had been doing a few things, but I hadn't gone through the process myself. So I definitely understand how you feel. If you're thinking about buying a home and you have all these questions and you're not sure what to do, um, definitely understand how people could be feeling these feelings. And that's what we're here to alleviate. And we're also here to point out the top five mistakes that home buyers make and how to avoid them. So hopefully you get something from this, as that's the whole goal here. Okay, just all right. Okay, so here's a little bit about me. Um, the most recent buyer that I helped negotiated just $30,000, just lopped off the top when negotiating with the builder. It was a pretty wild story. We just found some houses that had sold in this brand new neighborhood at lower prices, and I just used that to leverage reducing the cost. And it was funny because the salesman for the builder, which you need to understand, they represent the builder, not us. Um, the salesman said to me, "Oh, well, we've got one that's closing at this price and at that price." And I said, "Oh, congratulations. You found a couple of buyers that didn't pull comps, but we pulled comps. Comps is comparables. We pulled comparables and we found homes that sold at a reasonable price. And so we wanted to get the ones at a reasonable price. And to it turned into, $30,000 off the price. So of course my buyer was very happy about that. So um, here's our team. It's kind of a stock photo here. We'll probably get a group photo put together in here eventually. But this is me. This is Alan. This guy right here, that is Momo. He is a property whisperer. You just cut him loose on a property, and he lets you know right away if it's good for pets, if that's a concern. Okay. All right. So these are the steps to home ownership. Okay. The very first thing it starts with is getting with a mortgage broker to determine, okay, what's your buying power? They're going to tell you, they're going to take a look at your credit, they're going to take a look at your income, they're going to take a look at your situation, and they're going to tell you what your buying power is. So, if you do not have access to somebody that's got access to about 15 or 20 banks to choose from, all you have to do is just let us know. We can help you with that. Um, so that's the first thing that you do. If you're not ready for a credit pool, you're not ready to buy, and that's okay. That's fine. And maybe you're just looking to investigate. Maybe you're just looking to learn. And that's what we're here for. Um, but that's where it starts. We find out what your buying power is. Because you don't want to go out there and start looking at $1 million homes and then, we think, "Oh, okay, we're falling in love with this home. This is this, blah, 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 blah." Um, only to find out that you can only qualify for a $300,000 home. So we might as well just start looking at the $300,000 homes that are available, um, and make sure that it's something that you can afford. Because that's just pitfall to avoid. So we'll find the property. We'll have you review them. We'll actually potentially go to view some of these homes if you see anything that you like. Um, then we'll submit an offer and negotiate a little bit. Maybe we want price, maybe we want terms, maybe we want something that comes up in the home inspection report. We'll finalize the financing. We'll sign it, the lawyer, and then it'll be time to move in. And that's kind of the process in a nutshell. You can envision me as a pilot, and I'm flying the ship, trying to help us land this bird. And it's my job as pilot to communicate to you when we're having challenges and let you know what options we have. So that's what we do as far as helping people navigate the process. So, mistake number one, ignoring the first-time home buyer incentive programs. So in Duval County, there are a handful of first-time homebuyer incentive programs. They even have some at builders where they make a portion of your down payment for you, or they do a rate buy down to increase your buying power, where you'll get a reduced rate on your mortgage, either for the first few years of the mortgage or for the entire time of the mortgage. Um, there's also, let's see if I can move on here. I'm sure we've got, they are specific to the region. They can be dependent upon your income. There are forgivable second mortgages out there, and there's down payment assistance. So these are all things to kind of look out for. So this is an example here where your FHA, minus a minimum down payment of $35,000, would make total loan amount of $315,000, and you could get up to 6% back. Um, that's just, one example of how to structure it. Another example is to have the 6% come back directly from the seller. Um, there's all kinds of different ways to do it as far as figuring out where to get the down payment money from. I've got more to talk about that later. There's different types of mortgages. These are the top four types of mortgages. These aren't the only ones out there, but these are the most common. There's a conventional mortgage, and which is just cookie cutter. Investors buy that paper on the open market, and the biggest reason that they do that is because there's 20% down. Um, so because there's 20% down, there's significant skin in the game. Um, they just sell those mortgages and service those mortgages, and they receive payments and handle escrows and things like that. FHA is the Federal Housing Administration. USDA is another part of the government that deals with rural loans. Department of Agriculture. And then the VA is the Veterans Administration. So if you happen to be a veteran and you can get your hands on your DD 214, there's a lot of incentives, and up to including 100% financing on veterans um, trying to buy a home. Okay, and different lenders use different types, and depending upon your situation, we kind of go from there. Um, Federal Housing Administration will give the mortgage insurance. They'll charge you for the mortgage insurance, and then they'll lend up to 100%. of the purchase price and will allow the seller to contribute 6% of the cost towards your closing costs. We could use that towards closing costs, or we could even use that to buy down your rate. So if you found that you qualified for a $300,000 loan, then that would be $18,000 that the seller could contribute to the closing costs and rate buy down. Freddie Mac and Fannie Mae, those are private entities that are kind of backed by the government that operate the same way. They make sure that the money is available at different banks um, to for first-time home buyers to be able to um, fund these loans. All right, the benefits of an FHA loan, low 3.5% down payment with a 580 credit score. Credit scores as low as 500 with 10% down. There is a streamline refinance option available should the rates drop. They tend to be lower mortgage rates than what the market is currently offer. And DTI stands for debt to income ratio. That will allow for higher debt to income ratios. You can choose between the 15, 30-year fixed rate or adjustable rate terms. Oh, what we got here? I don't know what happened here. It went crazy on me. This thing just went nuts. Huh. Sorry, guys. There we go. Okay. And then this is the big one. It's kind of covered by me, but the seller can pay up to 6% of your closing costs. We can use that to cover your down payment. We can use that to cover actual closing costs, and we can also use that to buy down your rate here. Um, so there we go. And let's see. All right. First time home buyer incentive, 5-year payment reduction, total 5 years savings. $19,480 when you account for the interest. Conventional loan is a loan that is not offered or secured by a government entity. That's why it typically requires a 20% full 20% discount or down payment rather. Okay. All right, what you can and cannot use for down payment and closing costs. So this is very important. So you are allowed to use 401k money or retirement monies for down payments. So you can borrow against your 401k and use that money for down payments. You can use gifts. So if you happen to have somebody in your life that is in a position to be able to gift you money for a down payment, that's a possibility as well. If you have verifiable stock, bonds, or cash that you can properly source and prove where it came from, then you can do it there. You cannot use credit cards for down payment. You cannot use loans. Uh, they don't typically like to see loans because then that increases your debts. You can't use undocumented cash. Um, so you want to make sure that you have everything documented and that you can confirm where the money is coming from because the banks will ask where the down payment is coming from, especially in today's age where they track all the money. All right. Buyer's eligibility is based on an underwriting review, and they're looking at the collateral. What's the property actually worth? They're looking at your willingness to repay the loan. The they're looking at your ability to repay the loan. So it's really quite simple. Your willingness to repay the loan is kind of demonstrated in your history of paying back other loans. So if you have a history of paying back loans, then they would likely assume that you would be willing to pay it back. And then the ability to repay the loan is based on income. So if they see that your payment's going to be $1,000, they definitely would like to see four or five, six or $7,000 in monthly income or more. Um, as kind of an example. Um, if you have any questions, feel free to type them in chat. Um, All right, so mistake number two, not getting a pre-approval. As I mentioned, getting a pre-approval is very important um, because they're going to take a look at your credit, your income, they're going to source your down payment. They're going to make sure that they can find a bank or lender or mortgage company that would accept your particular situation. That's going to be really important because when they tell you, hey, you can qualify for a $400,000 home, you want to have the confidence that you'll be able to close on that home and get your dream home and get out of this rent situation that you're in. It lets you know how much house you can afford. They look at, as I mentioned, your credit, your income, and your assets. It will increase your bargaining power when negotiating with the seller. Like we'll show the seller, hey, look, you're trying to sell this home for $415,000. They're qualified for 400. Can you come down $15,000 and we save you some money there? You get a smaller mortgage payment, etc. You'll have an estimate of your monthly payments and your total investments before you sign anything, and they'll also help you identify which loan product will fulfill your needs. So if you need help with down payments, obviously FHA or VA would be your best option, as an example. All right, so tips for a simple loan approval. Okay, these are your do's and don'ts. I can tell you that, I've been doing this for, going on 20 years. And I think the craziest thing that I ever had happen to me was I had somebody who applied for the mortgage and they realized that their apartment was a little small. Sorry, I'm going to turn this down. They realized that their apartment was a little small and that they weren't going to have enough furniture. So they went out, they went into a rooms to go type place, and they bought all new furniture and had it scheduled to deliver after their closing date. And then during that process, instead of just paying for the furniture, the salesman recommended, well, why don't we finance all this furniture? We can do an application and then you can get this furniture and you don't have to pay anything. And they thought, well, yeah, that'll be great. I'll just, kind of like sign and drive for a car. Um, it won't cost me anything. I'll have the furniture delivered and then I'll have a place that'll be filled out. Um, the problem is that the lender found out that they borrowed that money and then it knocked them out of qualification. So if you're going to buy a new car, if you're going to buy furniture, if you're going to buy anything on credit, like basically anything on this list, don't do it. Don't change banks, don't close credit cards, don't consolidate debts, don't make large purchases. I had another guy where the engine and his daughter's truck blew and he just took it to the dealership and just said, you know what, I just want a new truck for her. I don't want her to have to deal with this. So of course it was a new $500 or $600 payment on the credit, and then it knocked him out of qualification. We were able to kind of, you know, for the most part, we were able to kind of get those loans closed. But it caused a lot of complications and a lot of issues, and we had to verify extra income and just take extra steps. Um, Everything else on the due side, just business as usual. Pay your current mortgage if you have a mortgage, pay your rent. keep working at your employer, keep your same insurance company, stay current on all accounts. Just la-di-da-di-da, business as usual. Don't do anything unusual. After you close, if you want to go out, buy a new car, buy new furniture, all that kind of stuff, knock yourself out because once you're closed, then the loan is funded and you're good to go. Okay. All right. So underwritten pre-approvals versus rate holds. Underwriting is when a representative from a bank will actually look at your specific information and promise to reserve money for your loan. So that's really what you're looking for. Whereas a rate hold will allow you to hold the interest rate. So if there's a drop in the rate and you want to lock that rate in, you can. They typically are going to want your file underwritten to make sure that they can reserve that money for you before they want to do that. But that is definitely an option for you. All right. With the pre-approval, you can shop with confidence. You get a $500 money back guarantee. And you just save yourself a lot of heartache. So that's definitely one mistake to avoid. Mistake number three is using your bank. When you walk into your bank, they have probably four loan products that they can offer you. If you qualify for those four loan products, no big deal. You use your bank by all means. But when you use a mortgage broker, imagine having access to 30 banks or 30 lending sources, and they get shopped, and you take the one that offers the best rate, the best terms, the lowest payment. Um, that's really what you're looking for is you want somebody that's kind of shopping it around for you and finding you your best situation. Uh, there are fees that are associated with banks. And let's say if you're in a large bank like the Bank of the Northern Hemisphere or the bank that shall not be mentioned, you're just a number to them. So if, like I said, if your round peg fits in their square hole, though, then you're lucky. And if not, they just say, sorry, we can't help you. Okay, they do have stricter guidelines and they tend to shy away from the down payment assistance programs. All right. Um, these are these are like different examples that you can use as far as you know what you're looking at is the posted rate or the annual percentage rate. So they might, dazzle you with, say, a 2.9% rate, but then you find out with all the fees and everything, you're really paying 5.6%. So it's simply a way for you to compare one lender over another. Because if you have one lender that's offering you, say, 7% and another lender that's offering you 6%, yet the APRs are different. It stands for annual percentage rate. That puts it into a number that you can. Let's see. This thing is going nuts again. I don't understand this, but here we go. This little slideshow I've got here has just got a mind of its own. Hey, guys. So you want to put the two offers side by side, and your mortgage broker will help you with this. If you don't have a mortgage broker, I've got some people that I can refer you to, and you can kind of work with them, and they will help shop this around for you. And then you can say, hey, what are the APRs on these two different loan situations? And that's a number that you can rely on because it's inclusive of your closing costs. All right, mistake number four, buying directly from a builder. I've kind of alluded to this before. Like I said, for my friend Dallas, who we looked up the comparables and what the actual properties had closed for, and we were able to get the builder to accept a lop $30,000 off the price. So you can imagine she was super happy. We just have to make sure that incentives that they're offering are really going to benefit you and help you. They do a lot they have large marketing budgets. They have deep pockets. So sometimes they're going to throw money at incentives. We just want to make sure that that's going to be helpful to you. One of the biggest ones that they're doing now is they're doing rate buy downs. So the market rate could be, I don't know, I'm just going to throw a number out, 7%. And they will work with the lender and say, okay, how much money would it take to buy this rate down to 5.5%? And if it could be 2% of the loan, which, if you were borrowing $300,000 would cost $6,000. And then they would just chip in $6,000 from their unlimited budget. And then you get a lower rate. So that's always cool when that happens. But just keep in mind, a real estate agent is going to work for you and a sales agent is going to work for the builder. So we're definitely going to get in there and we're going to negotiate on your behalf. A realtor can help you make the best decisions financially. We know what to look for, and believe it or not, we do inspections and walkthroughs. And we recommend that you do the same and that actually employ a professional property inspector. I had somebody say to me, I mean, it's brand new construction. Do we really have to get it inspected? Absolutely. I have seen things fall through the cracks, right? I have just seen brand new construction with some problems um, that just you just wouldn't expect. And there are things that the inspector will cover that we'll look at that the city inspector, they're just looking to make sure that you follow codes. So it's very cursory. All right. This thing is on a mind of its own. All right. So that's everything for the builder. And so if you were thinking about new construction, all you have to do is let me know, and we can find where the new builders are, where they're building, where they're located, and then we can help you through all that. Mistake number five, first-time home buyers make is skipping a home inspection. Um, in another world, I also run a property management company. So I've had a number of buyers that they acquire the property elsewhere, and then I get involved after the fact. So I didn't help them acquire the property. They already had it acquired, and then they found me as a property manager. And I can always tell, I know immediately when they did not do a property inspection. We're going to do our own courtesy walkthrough, because we want to be alerted of any issues. And, we've just had I mean, the one that I'm really thinking of is where the electrical system in the house was completely shot. So as people were starting to try to use the home, breakers kept getting tripped. There just a lot of things were happening. And finally, I sent one of my maintenance people over there. And I said, "Hey, man, crawl through this attic and try to figure out if we can find out what's going on." And as he crawled through the attic, literally every wire he encountered shocked him, which was just truly bizarre. It was just a sign of a serious, serious electrical issue at the house that we essentially had to deal with. And I said, listen, we're just not going to be able to rent this out until this is handled. Now, had he done a property inspection, he would have known about these issues ahead of time, and then he could have either negotiated with the seller. Um, the cost of skipping a home especially can exceed $20,000. Um, I've been involved with people, landlords, that they bought the place and they didn't even see it. They just bought it sight unseen because they're out of town buyers or whatnot. And so these are the risks. Um, you've got to know what's been done to the home. You need to know how old is the plumbing, how old is the electrical system, how old's the roof, and how old's the AC. I mean, that's at a minimum. And some of that stuff, if it's properly permitted and all that kind of stuff, some of that stuff we could just find through public record, because we can just kind of look up the permits and things like that. But it's not always like that. All right. And then mistake number six, if you happen to be buying a condominium or a home that's in an HOA, we want to make sure that we get those documents reviewed. Um, so the deal with that is that when there's a homeowners association or a condo association, they have rules. So, for example, if you have a dog that's 50 pounds and there's a rule in the HOA that says you can't have a dog over 25 pounds, you're obligated to follow that rule because the underlying premise is that if you see a rule in an HOA that you do not like, you have the option not to buy in there. You can buy somewhere else. So that's just a perfect example. You definitely want to make sure that all of your documents are reviewed. All right, so here's a recap of everything that we talked about. Don't ignore first-time homebuyer incentive programs. Get a pre-approval before you go to see homes. It's extremely important. Don't just go to a bank. Use a mortgage with access to multiple lenders, including banks, so that they can shop them and get them to actually fight for your business. And yes, that is a real thing because they want to lend money to people that have the ability to pay it back. They're not in the business to acquire homes, I promise you. Don't skip a home inspection. Any transaction that I would ever be involved with, a home inspection would be an absolute must. Don't buy directly from a builder. Have an agent represent you to ensure that they have your best interest, and never skip condo or HOA document review. All right. One of the things that I want you to understand is that you have a partner and somebody that's willing to kind of guide you through this whole process. And the biggest thing that I have is my shield, to protect you from a lot that you may not be aware of. And that shield gets us further through the process. And that shield, puts a gladiator in between you and potential issues. And that's what I'm here to do. I'm here to fight for you. All right. Do you feel more confident in being able to purchase a home now that you've heard this information? Feel free to type in chat and let me know. Is it fair to say that using these tips will give you a significant advantage when buying a home? Just kind of give me some feedback on this. I don't know what you knew about the home buying process before coming into the webinar, but if it was new and valuable to you, I would love to hear from you. Where my team and I are personally invested in your success, do you want to spend more time with me? It's very simple. Um, we're offering consultations for a limited time. This is free. Um, all you have to do is just go to this website right here. Um, it, oh, there's a little bit of thunder out there. If you give me just a second, I can, I'll make sure that I send you a link. I was gonna try and put it in. Let's see if I still have it here. No. But that is the actual link right there, Jacksonville 123 Zoom seminars.org/book. Um, you can just click on that. Um, and you can go there and book directly. I will text and email you this link, and you can just book a 30-minute consultation in which we talk privately. Feel free, if you have any questions, to type any questions in chat right now. Um, and again, this is no obligation. I don't charge anything for the meeting. I don't even charge anything to help you buy. Um, what I tend to do is collect my fee from the seller. We have 13,000 listings available in the Jacksonville area right now, so we can find a home for just about anybody in any situation that they're in. The magic is, let's get the mortgage loan approval. Let's make sure we know what you qualify for, and then we will find it. Okay, Ronald, I see your email there. I appreciate that. I will definitely make sure that I send you this email. Let me go ahead and copy that right there. So I'll definitely make sure that I get this email to you right away. And then also the text that you received the invite on, I'll send it to you there as well. Okay. And if you just want to get on my calendar for the next few days, you're more than welcome to. If you have any other questions, feel free to ask any questions. With that, thank you, Ronald. We appreciate you being here. We're definitely glad that you're here, and I hope it helps you. And if there's anything I can do to help you out, just let me know. Um, so go ahead and end the recording here.